Shifting focus to some of the earnings then, and Reliance Industries has come out with Q2FY24 report card, and which is in line to the ET now estimate. Like you can see on your screen, the revenue, PAT as well as margin has come in line on a consolidated basis. Definitely we will talk about the numbers, but taking through all the headline numbers, then the net profit has come in at 17,394 crores. That's a jump of 9% sequentially. EBITDA margin clocked in at 17.7%. The EBITDA has seen a jump of 8% sequentially, and onto the top line a growth of 12% on a quarter-on-quarter basis is what we have witnessed. Onto the segmental performance as well, we have seen their OTC business rather doing a bit well because it has seen a jump of 11%. But let's get in more details on Reliance earnings then and how the segment has performed this time around. Let me welcome Soumit Sarkar, my colleague. Soumit, take us through the numbers. How are the numbers this time, and anything exceptional that you are looking at now?
Well, if you see on a broader basis, the numbers are pretty much in line with what the street was expecting. On the EBITDA front, if you see, the street was expecting the number to be close to 40,300 crore rupees. The company has reported an EBITDA of close to 41,000, I would rather say. So it's a marginal beat that has come in, but on the net profit front, street was expecting a net profit of close to 17,840 crore rupees. The company has reported a net profit of 17,400. Now, segment-wise performance, if you see, the street was expecting the O2C and the retail segment to lead the higher growth, but the jump on a sequential basis was expected to be much higher from the gas exploration business. Now, the street was expecting the gas exploration business EBITDA to be 23% higher on a sequential basis, but it's actually come in 19% higher at close to 4,800 crore rupees, roughly. If you see, the exact number is 4,766 crore rupees. Now, the reason behind this higher sequential jump is the fact that gas prices were on the higher side, while the gas production also for in the exploration business was on the higher side. Now, when it comes to the O2C segment, that is the key or the higher contributor to the EBITDA number, that has jumped in around 6.6% on a sequential basis. The number has come in at close to 16,300 crore rupees. Now, this is on the back of the fact that the gross refining margin on a sequential basis were higher, and that's the reason why the GRMs for Reliance Industries were also higher on a sequential basis, and hence the O2C segment number has come in at 16,300. Now, when it comes to the retail segment, the street was expecting the retail segment EBITDA to be close to 5,400. Company has reported a 5,800 crore retail segment EBITDA, which is slightly higher than what the street was expecting. This could be purely on the back of higher footfalls and the store expansion that Reliance Industries has been continuously doing for its retail business. Now, a while back, Jio also came out with its numbers, which were also pretty much in line with what the street was expecting. We are yet to get the ARPU and the subscriber numbers, but on the EBITDA front, 13,000 crore is what the EBITDA street was expecting. The company has reported an EBITDA of 12,950 odd crore rupees. Margins have been largely pretty much stable on a sequential basis at around 52.3%, and net profit has jumped in 4% higher for Reliance Jio at around 5,058 crore rupees. Now, we are talking about Reliance Jio and not Jio Platform, which is the digital arm, but we are talking about Reliance Jio, which is the telecom arm of Reliance Industries.
Well, yes, absolutely. So just the ARPU number is what we are waiting by, but the numbers are looking in line, and we just got the numbers, Soumit. The ARPU is now at 181.7 rupees per subscriber versus 177.2 rupees last year. How is the number versus the expectation?
Well, street was expecting the number to be close to 182.5. The company has come in with 181.1. So a slight miss, that I would say. Not a larger miss, but pretty much in line with what the street was expecting.
Pretty much in line. ARPU number coming in from Reliance Jio, as well as the company also informs that the net subscriber addition accelerating to over 11 million now, and that's the update on Reliance Jio front. ARPU just marginally lower to the estimates, but with this, let's connect with the expert and understand that how is he looking at the numbers. We are being joined by Mayuresh Joshi of William O'Neill. Very good evening, Mayuresh, and thank you so much for your time. Reliance earnings are out, looks like in line versus our estimates. What are your first readings? The OTC business was expected to perform rather well, and this is exactly what we are seeing on the number front. What is your reading?
A very good evening. I think, yes, I think what the street was probably expecting, the O2C business to probably do well and the retail part of the business to also hold up. I think both these businesses have done phenomenally well, specifically the retail parts. I think Reliance retail numbers, both in terms of the absolute top line, along with the margins that they've done quarter on quarter, And we've still not entered the festive season. So I think Q3 is when Reliance retail numbers will be even better as far as top line and margins are concerned. So on a consolidated basis, the expectations in terms of O2C doing well has held up. Reliance Retail has held up pretty well as well. And even on the Jio numbers, even if the ARPU is a tad bit below what the street was probably expecting or believing in, what you're probably seeing in traction as I'm going through the notes in terms of what they've released in the press note, the phones are expected to be picking up huge amount of speed as we move forward. And as the 5G rollout becomes even more consciously spread out over the next few quarters, an obvious increase of an absolute ARPU number can be expected, which can boost and bolster numbers going forward as well. So I would say a decent set, first cut from Reliance across its segments.
Okay, Mahesh, thank you so much for your analysis and the first cut on Reliance earnings. But with this, let me also welcome on board Sushil Choksi of Indus Equity Advisors. Hi, Sushil. Very good evening and thank you so much for your time. Your first cut on Reliance earnings seems like an inline set to us, but looking at the internals, what's your reading, Sushil?
Good evening. Thanks for having me on the show. Looks like the company's result on all divisions is firing on a positive note, led by oil to chemical, which has outperformed the expectation. Jio ARPU numbers are stable, and Reliance Retail, based on the expansion what they're doing, quarter on quarter things are getting better in terms of footprint as well as on margins is stable. And as Mayuresh just explained, the festive season is around the corner. The current quarter should show you the positivity of the entire expansion. So looks like going into the current condition, the result seems to be on a positive note to support the market.
Hi Mayuresh, Soumit joining into the conversation. So my first, if you see the O2C segment that we were talking about, yes, on a sequential basis, the numbers have come in at around 16,300 crore. It's a jump of around 6.6%. But going forward, given the fact that we have seen a sharp decline when it comes to Singapore gross refining margin, how's your outlook when it comes to the O2C segment? Because that is one of the cash cows for Reliance Industries at this moment.
Oh, absolutely. I think, yes, it is at the moment as we see it. But again, we have to note the fact Reliance has got multiple options when it comes to feedstock. So even if Singapore GRMs come in at a lower, it would be on the lower side if we head into quarter three. I think the outperformance that Reliance will have here because of the sheer resources that it has in terms of feedstock, I think that is going to be extremely critical. Obviously, I think there will be some element in terms of contraction if prices are the way they are. And therefore, I think the expectations in terms of how downstream product prices probably stay put, the expectations in terms of both polymer prices, which obviously have gone down because of subdued global demand. The energy environment is very, very volatile at this point of time. But I think the domestic polymer and polyester demand should probably still remain extremely attractive. And because of that, I think on the core oil and gas business, I think there should be a reasonable amount of growth as we see going forward. They are also probably looking at ramping up the production. So I think what you're probably seeing in terms of the KGD6, both in terms of oil and gas, is the average price that they realized in the second quarter, tad bit below what was their year-on-year basis. And still, I think the performance has been reasonable. And same is the whole issue in terms of how the entire margins were expected to be. But again, I think it should be relatively better placed. The kind of drilling and the expectation in terms of both the KGD6 as well as the MG wells, I think more output can be expected, which can probably offset a little bit of the pricing pressure in Q3.
Sushil, I would like to get you also in this conversation. And when it comes to Jio, what we have been seeing is that it's the subscriber addition that has been leading the growth for Reliance Jio telecom business that we have been seeing, because this ARPU number has been pretty much subdued over the past few quarters. So going forward, how do you see the growth to pan out for Reliance Jio? Will it be around the 3% that we have been seeing for the past few quarters led by subscriber addition, or there could be some delta on the ARPU front also for Reliance Jio?
I think based on the entire expansion led by 5G and air fiber, what they've done, all the operational leverages which Reliance would have and fiber to home, I think the high-end customer penetration, which would expand quarter on quarter, would lead to an increased ARPU. So you may have a subscriber base which is growing quarter on quarter, but ultimately a high-end customer base, whether it's 25% or 30% of the total volume, and plus value-added services which they would add based on consolidation which is happening on media. Ultimately, telecom is driving that too on a combination basis. I don't see why within a year and a half, we don't see a 10 to 15% increase ARPU, which the competitor is continuously talking about 200 and then going to 300. So I'm quite sure that 181.70, which is per user right now, should be visible by the year end or the next year, at least on an average basis, nearing 200 rupees. So I don't see that the margins not expanding. The customer base will saturate sooner or later on an incremental basis, but the ARPU would start kicking in because the entire expansion is rolled out now.
And Sushil, when it comes to the retail business, yet another strong quarter for the retail segment, 13% jump in the EBITDA. Margins are at 7.56, which is at an all-time high. Given the festive season is now coming, how do you see, like, do you expect a higher growth? Do you expect margins to now come down for retail segment, or you're still expecting some margin expansion when it comes to the retail segment of Reliance Industries?
Reliance Retail is working on a strategy for mass consumption as well as digital and also high-end luxury. So on a blended basis, if they are going to go on a model which is balanced between large volume for mass and high-end luxury, the margin would incrementally increase as the entire rollout is over. The footfall is bound to be better in Q3, but on a blended basis, margin which is hovering between 7.5, 7.7 should kick in towards 8 or better within a year's time on a minimum basis, because luxury will have a higher margin as go future pans out. And second thing, the formats which Reliance is rolling out also should add margins from the current stature. So looking at the creation of kind of assets what they are doing and number of stores which they are growing quarter on quarter, I don't see why we should not have a positivity in terms of margin along with top line in the quarters to come by.
Mayuresh, one of the key concerns that was creeping up for Reliance Industries consolidated basis was that debt was again, that debt has started to rise again. But now what we are seeing here is on a sequential basis, they've actually managed to reduce that debt. The quantum is not high enough, around 20,000 odd crore rupees. But how do you see Street reacting, and how do you see that debt number to go ahead for Reliance Industries? Do you think the debt will be an issue, or will it continue to be a concern for the Street?
See, largely, if you look at even the annual general meeting in which Mukesh Bhai very clearly mentioned that he will not let the debt to equity or even the debt to EBITDA cross a certain threshold that they have in their mind. And to that extent, the calibrated investments that are happening, specifically in terms of renewables as well as the hydrogen part of the business, I think that will happen in a very, very calibrated manner over the next few quarters. So I think even if debt gets onto the books, it will happen in a very, very staggered manner over the next few quarters. And therefore, a large portion of debt getting front-loaded in the next quarter or two seems improbable at this juncture. What this also does is a lot of businesses are now self-sufficient. And a large part of the capex that is probably expected to take place will happen with the existing cash flows that are accruing into each business segment in a calibrated way. And the new businesses, as I said, the kind of capex spend that is happening, which will get spread over the next few quarters and years, will ensure that capacities come up in a very, very constrained manner and in a very staggered manner to the extent that it does not build up too much in terms of both debt and accelerated depreciation, which probably impacts the overall bottom line numbers for Reliance. So I do not believe that debt should be a major concern going ahead. The management hopefully should walk the talk when it comes to stable numbers, both in terms of debt to equity as well as debt to equity.
Okay, Mayuresh, four segments of Reliance Industries: O2C, gas exploration, retail, and telecom. Which is that one number that Street would be watching out for on for Monday, and how do you expect the stock to react?
Has been a reasonable performance, to put it. And the expectations in terms of volume ramp up expected to happen both in the MJPs and KGD6 should offset that effect. So I think not to put up with that. On the OTC part of the business, I think the numbers were very, very good. In spite of a shutdown on one crude unit, they also had the cracking unit shut down, so on and so forth. But I think the gasifier availability and the expectations in terms of crude prices moving higher would basically mean that the downstream product prices should show some uptick if crude stays the way it is in Q3. So I think the street will be pleased with the O2C performance as well. Retail has been outstanding. So as Sushil Bhai also mentioned, the expectation in terms of just the sheer spread in terms of stores opened in Reliance Retail, the expectations in terms of the area that they now operate, almost 75.1 million square feet, the kind of footfalls and festivities around, I think Reliance Retail numbers were a blowout, and that would please the street quite impressively. Last but not the least, Jio has done relatively better as well. And my own take is that ARPU increases as they happen would even strengthen the overall operating performance. So I think a stable performance expected. Some kind of headwinds on the oil and gas kind of business in Q3, Q4. But I think that should get offset with higher volumes. So no major disappointment, but my own sense is that Reliance Retail and O2C have done phenomenally well, which should please the street.
Yes, that's the consensus that we are getting from both of our experts, that no major disappointment in the earnings. But Sushil, lastly, if I may ask you that how do you expect the stock to react, especially on Monday morning, because we have already seen the fall in Reliance, especially from that 2,800 levels. The stock is now sitting at close to 2,300 levels. Do you believe that the valuations are quite cheap at this point in time, and maybe is the time to enter in Reliance Industries? And what's your short-term outlook as well?
So, ma'am, current global challenges which have emerged led by the geopolitical tension in Middle East, Israel and Hamas, what's happening with the bond markets in the US, it's more of a global condition which is impacting the Indian market, and we had a sharp correction in the week. If something has to stabilize the stock market in India, we needed 2-3 large caps to do the job. Has Reliance resulted done the job to stabilize Reliance stock? I would say yes. Does it provide inputs for positivity on a long-term investor to buy the stock? Yes. Does the business divisions segment-wise, if you see, analyze, most of the divisions have done well. Expectation on Geo would be high, and that would be met possibly on a 6 to 12 month out once the expansion sprint is over. And retail is concerned, I think as the new formats and luxury gets added along with online and the mass retail, I think the balance sheet would be indicating a positivity there, and they're attracting a lot of money from existing shareholders too. So on a consolidated result basis, they already incrementally quarter on quarter showing 5% EBITDA increase. So on an annualized basis, EBITDA, if it's going to move 20-25% for a large cap like Reliance, I think shareholder would be very happy. And uh, any weakness led by global markets or FI sell-off may throw opportunity for Reliance to be invested in for 12 to 24 months, because Reliance is right for a demerger, whether it happens in 6 months, 12 months, 24 months. It's only Mr. Mukesh Ambani knows about it. But as and when that happens, it would reward each and every shareholder, because I would like to own retail or oil to chemical and not Geo, or somebody wants to own Geo. One demerger on the finance has happened. The other two would happen. So ultimately, the rollout plan and the consolidation in every business which is expected in next 6 months to 12 months would start kicking in positivity. And by that time, you may hear good news about solar production coming in stream, hydrogen being initiated, and their vision to make a large hydrogen production led by their captive solar, starting from polysilicon to module, would have a different value proposition for the shareholder. So today, people may be nominating a very small amount per share, but it can be a value kicker because everybody wants green energy, and today's
Yes.
world environment is demanding higher and larger capacity. Just to give you an example, the Chinese largest
Yeah.
company produces 60 gigawatt, where Reliance
Yes.
is talking of 10 gigawatt. Can Reliance make it 10 to 20 and 30 gigawatt? One needs to watch out. But I'm
Yes.
quite happy with oil to chemical, and the festive season may support petrochemical division larger,
Sure.
and exports to Europe, which was a big kicker for oil to chemical division in the current
Yeah.
quarter, may have a little flat out, but I think overall the cash flow which is being sent out by the company may lead to a stability on a positive
Okay.
for the years to come.
Okay, Sushil, thank you so much for your take on Reliance Industries, as well as we would like to thank you, Mayuresh, as well for joining us today and giving us your takeaways from Reliance earnings. But with this, before we wrap this edition on the special earnings coverage, Somit, we have discussed the earnings with our experts. Looks like an inline set, but for the viewers, which were the major key takeaways?
So I'll give it segment wise. The O2C segment, we have seen the numbers to come in slightly ahead of what the street was expecting. For the gas exploration business, the numbers are slightly below than what the street was expecting. When it comes to the retail segment, again a marginal gain, I would say, marginal beat that I would say. But when it comes to the telecom business, again pretty much in line. And to sum it up, the consolidated numbers are pretty much in line with what the street was expecting for Reliance Industries.
So inline set of numbers coming in, but thank you so much, Somit, as well as all our experts for the special coverage on Reliance Industries. But with this, it's a wrap. Thank you so much for watching.